Welcome to Bears in Exile. Today is Thursday, March 8th, and this is the market overview, looking at all the stuff that we look at every single night. It's going to be a short video because there isn't too much going on. Starting off with the Dow. Yep, the Dow had a really nice, strong day. The news that has come out of Greece was very well received. Closing above the major price consensus level, but interestingly enough, not closing or even touching the top of the big red bar. Beyond that, and this is going to be echoed through just about everything tonight, 14-day RSI moving average ticking down, stochastics mixed, up on the CCI, down on the RSI, up on the MACD histogram, down on the MACD. Going to see this on just about everything tonight. And but beyond that, so it's very, very mixed because we have the long-term moving average bar. We came down, interacted with it, and was pushed out of it. That is natural. Of course, what we want to happen on the bearish side is for this to turn around and go back down and start working on it to collapse it. That could start as early as tomorrow, but by the same token, going back for a bar retest and bouncing off of it and then continuing on its way is very bullish. So have to look at both sides, and as the secondaries are mixed, it is very difficult at this moment to tell what exactly it's going to do, but in the end, the 14-day should mean more than most. So going to need more data tomorrow, and there's a chance that there'll be some reaction to the final results when they come out very, very, very late tonight. The results being the percentage of participants in the Greek deal, and if those are going to trigger any kind of insurance on the euro itself. SPX slightly different than the Dow in that we did exceed and closed above the top of the big red candle. Matter of fact, getting right to the upper price consensus level and stopping. That's where it closed. Secondaries and the 14-day, just like we said on the Dow. So, with very slight differences, but nothing really of note. So, this one is much stronger than the Dow, and we're going to have to see what happens tomorrow. I'm going to go do the NASDAQ really fast and then start jumping out of order. NASDAQ also very strong and essentially closing at the top of the start of the big down. Below the upper price consensus level, you can see that it went up, nicked it, and backed away, and closing above the major price consensus level. Secondaries, just like the Dow, no need to rehash that. Primary thing being the 14-day ticking down, and just like everything else, coming down, having an interaction with the long-term moving averages and bouncing off. Got to see if it turns over. And this was a fat body spinning top, so somewhat of indecision. Now the VIX today, very ugly. Had a deep penetration of long-term moving averages and were ejected, ending with a inverse hammer. Is that going to mean anything tomorrow? Don't know. But the 14-day is still ticking up, even with the stochastics mix, down on the CCI, up on the RSI, down on the MACD, down on the MACD histogram. This is normal behavior. As you can see back here, you come up, you hit it, it bounces it off like a rubber band. Are we going to get a second try at it like this? We don't know yet. Hopefully we won't have sideways like this, but we're going to see what the news has for us overnight. XOI oil, very interesting. Ended with a fat body spinning top. We still have the middle Bollinger Band above it, which is bearish. Still have the 14-day RSI moving average ticking down, and all the other stuff is the same as essentially the Dow. So mixed, but not exactly good looking, as most of them are pointing up. But so anyway, this is mixed. What is more interesting to me is the news that Obama is going to give Israel the bunker busters if they delay until after the election, which they probably will. In which case, the tensions in Iran are going to fizzle, and the price of oil should go down. So, and that would line up with the 14-day RSI moving average. So that's one point, in my opinion, in the bear's book. And bouncing off long-term moving averages is not the end of the world. It is natural. TNA ending with a hammer today after its little 2-day run up. Does that mean it is the end of the up phase? Or is this the reverse of this down phase? I am more inclined to believe it is the up phase, but I mean, the secondaries do paint a different picture. 14-day RSI moving average still ticking down, still room to move, and the secondaries all looping up except for the RSI. So, ejection from the long-term moving averages, yes, it is entirely possible, and hopefully it'll be contained by the 14-day RSI moving average. Now, the real deal of the market today, UUP. We were saying last night we absolutely did not like the positioning of the candle, or that it was bearish engulfing the previous day, and that it was just completely unattractive. Well, huge gap down today and red the whole day. Yeah, that'll do it all by itself. So that did pan out, and hopefully it is not going to try a retest of the floor. That would be horrible for the bears. 14-day RSI moving average still ticking up, and all the secondaries essentially ticking down. So we do have a mixed bag, and at face value it is not attractive to the bears. It just isn't. FXE confirming it. Said last night, bullish engulfing. Did not like the positioning of the candle or its type. Yes, the 14-day RSI moving average is ticking down, but the secondaries are all ticking up. Not a good thing for the bears. It is a good thing for the bulls. And the news is going to make all the difference in how it's received in the morning, with the percentage of the people taking the Greek deal. And we said last night that this was going to be entirely dependent upon the news, which was favorably received today in a major way. Gold. Well, at the moment the dollar is winning over fear. Maybe it's a combination, but in any case, we have it's either a hammer or it's a spinning top. We've been saying that we wanted it to be in this range by the time the 14-day RSI moving average gets to the bottom, and at least it is back in that range. So that's good. And secondaries all ticking up. So SLV doing very similar to gold, which is to be expected, stopping at the major price consensus level today. Still have the middle Bollinger Band above the short-term moving averages and the candle, which is bearish, and the 14-day RSI moving average still bearish, but the secondaries all trying to turn around or have already turned around. So, very similar to gold, very mixed bag. XLF, the financials, not a bad day at all, ending with a hammer, very similar to there's a TNA. 14-day RSI moving average ticking down, stochastics mixed, all very similar to the Dow, and all dependent upon the news in the morning and overnight. But just like everything else, came down, tagged the long-term moving averages, bounced off of them, completely natural. Apple. Excuse me. This one had so much strength to it today. Oof. Now this one is different. We did not come back down for a tag of long-term moving averages. All we did was a bubble corrective move. This is much stronger than everything else. 14-day RSI moving average, ticking sideways, staying high. Stochastics mix, CCI up, RSI up, sideways on the, or actually a slight downtick on the MACD, up on the MACD histogram. Much, much stronger, and Apple has been holding up the market all by itself. Is this a tell that the bears should really be worried? It very possibly could be. Beyond that, GE, foretelling of the Dow, ended with a spinning top, which is indecision, but it closed above the major price consensus level. It's very close to overtaking the middle Bollinger Band. Sideways on the MACD, ending its downticks for the moment, and essentially everything ticking up with the exception of the RSI itself. So yes, this is rather bullish at the moment, and a deep penetration of the long-term moving average bar and an ejection, natural. We need to see what happens news-wise in the morning. What else is there? I guess that's pretty much everything. And there you have it, at the mercy of the bankers, at the mercy of the news, and that'll do it for tonight. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.